Okay, so in this video, you are going to learn about the three types of break of structure and the two classification of break of structure. So in the two classification, we have the minor break of structure and then we have the major break of structure. But first of all, let's just type in the types, sorry, uh, the types of BOS. All right, so this is going to help you visually to see or to remember the types. All right, now in the previous video I explained to you what break of structure is and the mindset behind the break of structure, that every time or anytime we have break of structure, let me show you. Like in this case, we have a break of structure here, right? We have a break of structure here. Okay, now to the ordinary trader, he or she might not be able to classify this kind of break of structure. All right, but what I want to explain to you here is what I showed you in the last video, that anytime we have a break of structure, right, the low or the guys that cause the break of structure will always protect their origin, and that is what happened here. You can see that the buyers here that caused this break of structure protected their position when the sellers were trying to go below their price point. Okay, so now there are some break of structure that are stronger than the other, and it's possible that the reason why you've been having so many losses or is because of you know the lack of this knowledge. So now let's go into it. So the break of structure that we have, all right, we have the type A, type B, and type C. All right, type A has um, a fair value gap and liquidity sweep, and that is what we have here. Okay, so you can see that price started from this origin, came down, push up, came down, push up, came down, and then everything happened in this manner. So here is where we have the liquidity sweep. All right, so what does that mean? That means that there are some traders here that they blow their account or they lost part of their account here. Okay, so they might see this as a support and resistance, or they might see it as a change of character, and then they are trying to sell and then price push to the upside. These people that see it as a support, they are trying to buy and price push to the downside. Okay, so this is the liquidity point, all right, where we have traders being liquidated. All right, and then this is what a change, a break of structure. Okay, uh, we can also mark this as the overall break of structure, like from the origin. Okay, from the origin, because this is where the guy started from, the price started from. All right, so now this kind of break of structure are very, very strong. Okay, and when a change of character happened on this level, right, it is not going to be a fake change of character. Like in this case, if any trader has labeled this change of character, this is going to be an authentic real change of character if price drop below it, like we have here. Okay, and as you can see, price actually respected it, pushed to the upside. So this break of structure that we have here has what? It has a fair value gap. Let me show you. This is a fair value gap. Just a minute. So this is a break of structure that has what? A fair value gap. Can you see that? And then a liquidity sweep. Okay, so let's put it. And this type A is the strongest. Okay, type A, type A break of structure, all right, has a fair value gap. Okay, and what? Liquidity sweep, or let's just do it this way, liquidity sweep. Okay, this type A, like I said, is the strongest. All right, now let me show you type B. Don't forget this type A, because we are going to do um, a short test after this. Okay, so let's look at this. Let's use this. Now here we also have what? A break of structure. Okay, so let's see the type of this break of structure. Okay, now look at this break of structure. Do we have any liquidity sweep to the left side? Did it sweep any liquidity, like maybe take out any high? No. Can you see that? It didn't take any high out. Does it have fair value gap? No. This is where the fair value gap is. Okay, but right around the last bullish candle, does it have? No, although it has before the break of structure. Okay, so this, right, is the second strongest break of structure. The second strongest break of structure. It is that break of structure that does not have liquidity sweep but has fair value gap. Do you understand that now? It does not have liquidity sweep, but it has fair value gap. So when you are marking your breakout structure, you should look out for this character. Does it have liquidity sweep? No. Does it have fair value gap? Yes. So now if you mark the last bullish candle here, you can see what happens there. Price got to that level, right? And what? Sorry. Price got to that level, and what happened? Um, sorry. Okay, good. He's back. Oof, just a minute. So I want to push this to good. So what happened? You can see that price got there and then price dropped to the downside. So type B, type B, type, type B has fair value gap but no liquidity sweep. So this is type B. Okay, type A is very strong. Type B is the second strongest. Why type C has none of this? Type C has no fair value gap and type C has no liquidity sweep. Okay, so let's do that. Type C, has no FVG and no liquidity sweep. Okay, now we know how the trading industry is, or the trading market is that there are times that this is going to work, all right, but most of the time if you check, is not going to work. It's going to be violated. It's going to be a fake entry. All right, so um I would have used this as an example, right, which is actually very, very a good one. So let's look for that break of structure that does not have fair value gap and does not have sweep of liquidity. Okay, that does not have fair value gap and does not have the sweep of liquidity. So let's look at this. This is a break of structure here. Okay, remember I am on 4 hours time frame. Okay, so all I'm doing is on 4 hours time frame. So now you can see here that this is where the break of structure occurs. You can see we don't have any liquidity sweep, on the left hand side. So there's no liquidity sweep and there is no fair value gap. Can you see that? Before, so the fair value gap must be before the what? The break of structure. Okay, it must be before the break of structure. We are not going to consider this and this as the fair value gap before the break of structure, because this candle is part of the break of structure. I don't know if you get the point now. So I didn't mean that this candle is up here, you understand, is up here, and then we now have fair value gap from this point to this point. That would be fantastic before the break of structure. Now, the fair value gap is part of the break of structure because this is the candle that originally breaks this price point that we have here. So before the break, there should be a fair value gap. All right. So, and as you can see, so if you're a trader now and then you are trying to trade from this point, you can see how price liquidates you. Price first pretended as if it wants to respect your position, but look at it, like it is going to liquidate the trader, in a calm manner, okay, and aggressively here. Maybe when you are trying to revenge any trade, aggressively took you out. You understand? So these are the three types of break of structures that we have. All right, that we have. So now let's just quickly do some tests. We are going to um, delete all the drawings now. I believe you understand, what I did, right? I believe before I delete, I believe you understand the types of break of structure that we have. Is very, very important. This is going to help you to, um, you know, analyze your trade, all the losses that you have. Is going to help you to know the things you are doing wrong, right? Because you can have a loss and then you don't know what you are doing wrong, but you just accept and believe that it's part of the market, and it's being preached that you can't have every win, or you can't have all your trade as a winner. You are going to lose some and win some, but let your win be more than your loss. But with this, it will help you to cut some of your losses. You understand? So we have type A, type B, and type C. Type A is the strongest, type B is the second strongest, and type C is the weakest. Okay. Well, so what is type A break of structure? Type A break of structure is the break of structure that has fair value gap and liquidity sweep. Just like we have here, there's a liquidity sweep here, and then there's a break of structure. All right, and we have fair value gap. As you can see, there's a fair value gap here. All right, I don't want to enlarge this so that I don't miss this. Then type B is the break of structure that has fair value gap but no liquidity sweep, and this is an example. This is a break of structure. All right, that we have a break of structure here. We have a break of structure, but there is no any liquidity sweep on the left hand side, just the same way we have it here. Okay, where we have this lower than this, we don't have any high that is lower than this, that this high took out. So there's no liquidity sweep, but there is fair value gap before the break of structure. So you can see price respected it, drop to the downside. Okay. Why the third one, which is type C, is the break of structure that does not have fair value gap and sweep of liquidity. Okay. And I show you an example here. All right, this is a break of structure. There is no any sweep of liquidity on the left hand side, and there is no fair value gap before the break of structure. And you can see how price you know took out this level here. Okay, so what I want to do now is I want us to just quickly combine the knowledge from the previous video that I did, which is a break of structure, and also this present one, all right, as a review of identifying the types of break of structure that we have. So I will just quickly do it now so that when you want to analyze your market, you know how to go about it. So I'll just quickly pick my okay, so it is here, my brush. All right, so as I said, you should mark your your visible high and lows. Excuse me. Mark your visible highs and lows. These are my visible highs and lows. I can see it's very, very visible. All right, and there is no any special rule to this. Remember, I told you that you can adjust it. If you have watched the previous video, you would have seen that. Okay, so the next thing to do now is to now is this zoom out now? Yeah, zoom in. Okay, so that if we have to adjust any point that we have marked, we are going to adjust it, and if we have to delete any point, we are going to delete that point. Okay, so I think this is the beginning of Yes, so we just started from here. Okay, so now we can see that price is pushing to the upside. That's what we can see. So now we have a break of structure here. Okay, we have a break of structure here. What type of break of structure do we have here? You can see that we have, this is the main break of structure, which I call the major break of structure, and then this one is a minor break of structure. Okay, this is a minor break of structure. So you only have minor and major break of structure in a break of structure that has liquidity sweep. Okay, so now you can see that we have liquidity sweep here. Here you can see that we have a liquidity sweep here. All right, price took out some guys even down to this level. Okay, so now if we look at this break of structure, what type of break of structure is this? This is going to be what? um do we have any liquidity sweep? Almost, this is almost like a liquidity sweep. Okay, so this overall took out this also. Okay, took out this low also. So all the lows were liquidated. There is not any hard rule to it. You can spot it. Okay, so it took it out. All right, and then we have break of structure to the upside. So this is type A break of structure. Okay, type A break of structure. If you put your liquidity line here, you are fine, and if you put it here, you are fine. All right, so this is what type A break of structure. Why? Because it has liquidity sweep. Now let's look at another one here. Okay, here let's look at this. We have a break of structure here. We have a break of structure here. Okay, now this break of structure, does it have liquidity sweep to the left hand side? No. Can you see this is the last low? There is no any liquidity sweep. So this is what type B. Okay, this is type B. Sorry, this is type B break of structure. Okay, because there is no any liquidity sweep to the left hand side. Can you see? No any liquidity sweep here. So this is type B. So this is what how you can know an authentic change of character. Okay, an authentic change of character should be the character, or should be a change of character that has liquidity sweep. What I mean by that is, you know that this is the low, this is the last low that we have. Okay, so until price, if price come and close below this low, that would be a genuine change of character. Do you understand that now? Because this is the strongest break of structure. All right, so this is the second strongest. All right, as you can see, if anyone had tag this one to be change of character, the person will be in strong losses. The person is going to lose. You can see how price push to the upside. Okay, so that is you know uh why I just thought to say that. So this is what type B break of structure, the break of structure that has fair value gap. This is a fair value gap but no liquidity sweep. Look at it here. This is a fair value gap because this is the last low. You can see it has fair value gap, and when price came back, you can see it was respected. Okay, you can see that it was, the fair value gap was respected. You can see that it pushed back into it, and moved to the upside to break the structure. So this is type B. It does not have any liquidity sweep. Okay, so we are just analyzing now. We are not really looking for maybe type C or type A break of structure. Okay, so now we have another break of structure here. We have this. Okay, we have that, and then this is going to be what? This is going to be what? Our type A break of structure, because it swept this liquidity. Okay, it swept this what? Liquidity. So this is going to be our liquidity now, and this is going to be our swing low. Okay, remember that I named this one swing low. Why? Because it has liquidity. So anytime price closes below it, I will term it as my potential, as my change of character if price closes below it. You understand? But when price is still up here, right, I will call it my swing low, so that when price closes below it, I will change it to change of character. Do you get the point now? So I only confirm a trend as change when the previous break of structure has a liquidity sweep. If it does not have a liquidity sweep, I'm not going to call it that. I can call it a shift in the market. Like in this point, you understand? I can call it a shift in the market. Like, price closed below this low that broke this high. Do you understand that now? So now, so we have a liquidity sweep here, and then we have a break of structure here. So now this is going to be my what? Change of character. Do you understand that? So I'll be looking to sell. Okay, I'll be looking to what? To sell. So now there is, we have not, or I have not taught you about an entry model, how to look for entry in all these analysis that we are doing. How do you look for entry in a type A break of structure, in a type B break of structure? All right, I won't say you should look for an entry in a type C break of structure. Okay, so this is a very good entry if you know, this is a structural inducement. All right, and we look for entry, all right, inside a structural um you know inducement like this. So this is going to be a good point to sell the market. You understand? So now this is where our change of character happens. All right, but our focus is on the types of the break of structure. All right, and so what happens here is that price push down. All right, so this is, let's see, so this, we are done with this part. All right, we are just identifying the types of break of structure. All right, so now we have another break of structure here. You can see this to the upside. Okay, to the upside, and then we have liquidity sweep. Can you see that? We have liquidity sweep. Okay, and then we have another change of character again. So the market is confirming to us twice that I am going down. In the matter of 2 or 3 weaknesses, the truth is established. Can you see that? So the first change of character we have here, and then the second one we are having here again. So the market is telling us that by all means, don't think that I'm going to go up. I am coming down. And then it gave us 2 confirmation to show that, come on, I am coming to the downside. Don't be induced. Okay, so this is what? The liquidity sweep, right? This is the low that caused this break of structure. All right, do we see that? Now, this is type A. Okay, then let's look at this break of structure. This break of structure, let's look at this, what this one is. If it has fair value gap, it's going to be type B. Yes, it does. You can see it does before this break of structure. So this is going to be type what? Type B break of structure. Type B break of structure. And as you can see, we have price. I don't know if I've done this before. Price reacted effectively from this point to the downside. Do you see that now? Okay, so we are able to identify type A, type B, and type C. So this is what you should continue, or you should continuously do in your analysis when you are analyzing your market to look for an entry. All right, so thank you everyone. Thank you for watching this video. I would like you to like, subscribe, and share, and comment, so that I can hear your thoughts on this video. God bless.